Good morning, everyone. Thank you for joining us here bright and early. Those of you who are on time, it is appreciated. So first, we're going to call this meeting to order, as I just did. I am Assemblyman Jarrett Gandolfo from New York. I will be chairing this committee today. There's no need for a roll call. The staff will mark everyone's attendance today. And first, I will entertain a motion to waive the quorum requirement. All right, second? We have a second. All right, the motion carries. We are going to go a little out of order today. We are going to begin with the readoption of some of our models. That's item 5, I believe, on the agenda here. So the models that we are looking to readopt today.
Did you do minutes?
Oh, I did not do minutes. Thank you.
I apologize.
Thank you,
for not
Ann.
getting you sooner.
Yes, and now I need a motion to approve the July 17th, 2025 meeting minutes. All right, and a second? All right.
Thank you.
All right, motion carries. Now we will move on to the readoption of three model laws. The first one is the NCOIL Rebate Reform Model Act adopted on March 8th, 2020. The second is the NCOIL E-Tilting Model Act adopted also on March 8th, 2020. And also the NCOIL Model Act concerning statutory thresholds for settlements involving minors adopted on September 26th, 2020. These models can be viewed in the binder. I'm not sure which page, but they're in there. And these are long-standing, non-controversial NCOIL models. To date, no comments have been proposed. So we are looking to do them all on one motion in the interest of time. So can I get a motion to adopt all three models simultaneously? We have one. Second? We have a second. All in favor? Noes? Okay, the three models are adopted. Thank you very much. We are going, again, out of order still. Just get my papers in order here. So we're starting at number 3, right? Where's the fraud stars? Okay. All right, so we will be moving to a discussion on the proposed amendments to the NCOIL Insurance Fraud Model Act. In Chicago, we heard a very compelling presentation from the Louisiana Insurance Commissioner, Tim Temple, detailing the state's aggressive efforts to combat insurance fraud. These include legislative expansions to the definition of fraud, increased staffing and funding for the Department of Public Safety's fraud unit, and heightened enforcement actions against insurers for post-claim underwriting and other violations. Today, we will hear about proposed amendments to the NCOIL fraud model, sponsored by Louisiana Representative Gabe Ferment, that reflect this proactive Louisiana framework aiming to strengthen fraud prevention nationwide. We will hold questions until after our speakers have finished. Our first industry speaker on the topic is Kyle McCollum from the National Insurance Crime Bureau, NICB. Kyle, please go ahead. The floor is yours.
Good morning, Chair Gandolfo, Vice Chair Grayson, and members of the committee. My name is Kyle McCollum, and I'm the Vice President of Strategy, Policy, and Government Affairs of the National Insurance Crime Bureau, or NICB. Thank you for this opportunity to express NICB's strong support for the pending amendment to strengthen the Insurance Fraud Model Act. I also extend NICB's thanks to Representative Ferment for his leadership in sponsoring the amendment, and to our close partner, my friend Brent here, with the Coalition Against Insurance Fraud for their great work on this effort. NICB sits at the intersection of the insurance industry, law enforcement, and departments of insurance across the country. Our membership includes more than 1,200 property and casualty insurance companies, vehicle rental companies, auto auctions, vehicle finance companies, self-insured organizations, and other strategic partners. Through advocacy, intelligence, education, and investigations, NICB works to detect and prevent insurance crime and fraud. The amendment pending today would help combat inflated and exaggerated billing, one of the oldest forms of cheating someone else out of money. Despite nearly all states having an insurance fraud statute on the books, inflated and exaggerated billing remains a loophole that fraudsters can still exploit. Over the past few years, NICB has witnessed a significant increase in questionable claims referrals to our organization related to inflated and exaggerated billing. From 2022 to 2024, we saw a 41% increase in questionable claims related to faked or exaggerated harms on auto policies, and a 62% increase in questionable claims related to fictitious losses. From 2022 to 2023, NICB saw a 15% increase in QCs, questionable claims related to inflated damages on roofing claims, and a 46% increase in questionable claims related to fictitious losses. And finally, from 2022 to 2024, we saw a 53% increase in questionable claims related to inflated towing invoices. The pending amendment to the NCOIL Insurance Fraud Model Act would provide valuable guidance for states in combating these trends. If adopted, it would help ensure that anyone who knowingly presents a statement, estimate, or invoice that, quote, misrepresents the scope of damages or cost of repairs, end quote, may be found guilty of insurance fraud. This language is inspired by similar anti-fraud legislation that's been enacted recently in Louisiana in 2024 and in Kentucky this year. We also applaud the proposed drafting note that we have worked together on in this amendment that encourages states to expand the venues for insurance fraud prosecution. This will help ensure that resources are available and that cases can proceed. In short, the amendment will further strengthen the Model Act, protect consumers, and improve deterrence against insurance fraud. We encourage the community to take up and adopt this amendment today. I thank you for your time, and I welcome any questions.
Thank you, Kyle. Our next scheduled speaker is Brent Walker from the Coalition Against Insurance Fraud. Brent, go right ahead.
And thank you for the opportunity to share a little bit about the model and our support of the proposed amendments. The Coalition Against Insurance Fraud is a consumer advocacy group, and our membership is quite diverse, from consumer groups to carriers to government agencies and other organizations like the National Insurance Crime Bureau dedicated to fighting insurance fraud. If I can, I'll start with a little bit of history. 30 years ago, in 1995, the Coalition is actually the one who proposed this model law. And my predecessor, twice over, tells the tale. After the first state passed a law using the language for this model, he stood there in front of a fax machine as the new law came through page by page by page. So since then, it's been amended twice since its first adoption. And I think this third amendment will just further strengthen the fight against insurance fraud. In the preamble of the model, it says that insurance fraud is expensive, and it is. According to our research studies with the Coalition, insurance fraud costs every American $308.6 billion. It also steals lives. Tragically, we've heard the tale of Alice Ross, the 71-year-old grandmother who was an innocent victim in a staged accident scheme. So we have to confront insurance fraud head on, and that's exactly what this model does. And adding a third element to the definition of fraudulent insurance act, what this amendment proposes, will just help strengthen, as Kyle said, the recurring problematic issue of billing fraud and inflated estimates when it's been submitted with knowledge and belief and a lie has been told. Also to these amendments is an option, a drafting note, to remind states that in their jurisdictions when it makes sense to expand venue and clarify venue. In preparing to speak this morning, we spoke with Louisiana Department of Insurance, and they tell us that the reason they passed this law in 2024 was that it does close prosecutorial loopholes, and it gets rid of that he said, she said, and it is the individual or the firm that actually creates the fraudulent estimate who should be held accountable. So for those reasons, we thank you for this consideration, and we strongly support the passage of these amendments.
Thank you, Brent. Our final speaker scheduled here today on the topic is Hillary Segura with APCIA. So Hillary, if wherever you are in the room, you could come on up and state your piece.
Do you want to sign it?
Actually planning on speaking. I just was slipping in support of the motto. So thank you.
The support is noted. Thank you. Okay, so our presenters are finished. I will give Representative Furman, if you have any remarks you'd like to make on the model, you can go ahead now, but is he here?
He's not here.
Oh, okay. All right, he is not in the room. That is fine. So do any legislators have any questions or comments on what's before us today? All right. All right, that's great. All right, so based on what we've heard, I think the amendments are ready to be considered here today. Just a point of order, if we do adopt the amendments today, we will also need to re-adopt the model as amended. So first, I'd like to entertain a motion to adopt the amendments. Do I have a motion? All right, do I have a second? All right, all in favor? Any noes? Okay, now I would need a motion to adopt the model as amended. Can I have a motion? Motion, a second? All in favor? Any noes? Okay, it carries. All right, thank you all very much. And now we are moving on to the normal order here. And now we'll be moving on to the introduction and discussion of the NCOIL Model Act regarding insurers' use of artificial intelligence. We have two proposals before the committee today, the NCOIL model, which was discussed for the first time in Chicago, and an alternative AI proposal, the use of artificial intelligence systems by insurers, submitted by American InsurTech Council. We still have a lot to discuss, so we will not be voting on this today. You can view the model and the AITC proposal in the binder on the website and in the app. Before we go further, I'd like to turn things over to the sponsor of the model, my colleague from New York, Assemblyman Eric DeLon, and Oklahoma Representative Forrest Bennett. I don't know if he's not here. So, Mr. DeLon, if you have any comments, the floor is yours.
Thank you, Mr. Chairman, and I'll be as quick as I can. And thanks to everyone who weighed in on this model since it was first introduced. And as I said in the meeting in Chicago, this model was meant to be a conversation starter. It's based on a bill that has been reintroduced into Florida for next session, and it borrows from similar concepts on the health side of things with prior authorization that has been passed by several states. So as I mentioned in July, I think we as policymakers should at least discuss whether or not these concepts make sense across all lines of insurance. I think the concern that I had from Chicago is the information that we received from the industry was, no, we don't want anything at all, which I think is, it could be short-sighted, because as policymakers, I think it's incumbent upon us to decide whether or not we want to adopt models in this forum or adopt models in our states. So to continue to work and have feedback from the industry to help shape what is a good workable policy, I think is incumbent upon all of us to try to get it to the best workable model as possible so we can collectively bring back to all of our states. I want to give kudos to the American InsurTech Council for, at this point, stepping up and offering a different approach. I think we all need time to digest that, but I do think that it's worth having the discussion on both models to see if it makes sense to come up with a framework for combining both models, or a starting point for something different, or adopting each model independently. But at least it's an effort by saying, hey, here are our views, and we can help shape the discussion, and I look forward to that discussion today. Thank you, Mr. Chairman.
Thank you. And now we'll move on to our speakers. First up, we have J.P. Weisky representing the American InsurTech Council. We're going to hold questions until all the speakers are finished. J.P., the floor is yours.
Yeah, thank you for having me. The American InsurTech Council, by the way, is a group of over 125 small InsurTechs through our partnership with the InsurTech Alliance, as well as having members that are legacy or sponsors that are legacy insurers, solutions providers, and AI providers. We brought forth this model because we have some concerns with the simple solution of just having a human in the loop. We don't know that this bill, we think that this bill is potentially both too narrow and too wide. We think it's too wide because of its application from a claims perspective across multiple insurance lines, which deal with things differently, and the concerns in P&C and homeowners insurance, auto, life, are very different in the use of AI than they are with health, and even inside health, there's some significant differences. When I started as a claims analyst in 1993, the number of claims that were auto-adjudicated was very small, and my company was experimenting. It was a small company. By the time I left, the claims department was one of the smaller departments, and IT had grown to be the largest department. Over 50% of the claims were auto-adjudicated in 2003. Now we flash forward to where we are today. It is certainly true that in a lot of cases from a health perspective, 90+% of claims are auto-adjudicated. The concern that I have is the cost that's going to be incurred by having a human in the loop. We understand the concerns when you're dealing with medical and other pieces and making those medical judgments. We do think that when you go through this process, the way the insurers go through this process, those claims are treated differently and go through an entirely different process. But just adding a human in the loop is also not enough. And so our proposal builds on the NEAC's AI model bulletin that we were looking that has been adopted by 25+ states across the country. The idea is that we need to have a starting point for the regulation of AI, and it is not the last step. There's no intention for our bill to be necessarily the last step. We think the policy needs to develop. We're in an area where we've got a lot of promise around AI, and some of that is going to take a lot longer than the optimists believe is going to happen. So we're in the sort of the false promise era, that we're going to be down to 25 working hours, et cetera, et cetera. But the AI policy needs to develop. So what we're looking at, if you take a look at our model, is a multiple approach where we have requirements on the insurers to ensure that they have governance, that they're checking for bias and other things inside those models. And by the way, this applies when I started off the discussion that we think it needed to go more broad. This applies not just to claims. This also applies to the use of AI across multiple systems that insurers use. It's certainly used in rating. It's certainly used in customer service. It's certainly used in a variety of ways inside insurance companies. And our intent is not just to focus on claims. It's to focus holistically, include requirements that the insurers are going through this governance process, that the executive team is actually monitoring and ensuring compliance with their stated goals and rules for the use of AI, and then having a look-in by the insurance departments to be able to, as Ronald Reagan, trust but verify. This is not an easy discussion, and we really appreciate the start of the conversation. We understand that, as H.L. Mencken once said, that to every problem there's a solution that's easy, elegant, and wrong. We're concerned that focusing only on the human element is not enough and can be subverted and create other problems. I think narrowing, the focus, if that's the only way we're going to look at this, I think is going to be important in looking at different issues. But we think the alternative approach that we've suggested will provide good oversight and will allow as you're able to look inside the companies, you're going to be able to better understand how to regulate as we move forward. And we need to look at this as an evolutionary regulatory process than this being the end point. So thank you.
Thank you, JP. Next, we will hear from Lucy Culp from the Leukemia and Lymphoma Society. Lucy, please go ahead.
Lucy is not here.
okay.
I will do my best. My name is Dave Almeida. Sorry, Lucy could not be here. She had a conflict. Dave Almeida with Blood Cancer United, formerly the Leukemia and Lymphoma Society. As we like to say, same mission, different name. And I appreciate very much the opportunity to provide comments to you this morning as this process evolves. At Blood Cancer United, our mission is to cure blood cancer and improve the quality of life of all patients and their families. We fund life-saving blood cancer research around the world, provide free information and support services for patients and their families, and are the voice of those seeking access to quality, affordable, coordinated care. The integration of artificial intelligence into healthcare has slowly changed how health insurers and providers deliver care to patients. As we know, AI is increasingly being used by health insurers to automate a host of functions, including process utilization management like prior authorization requests. An NAIC survey earlier this year found that approximately 68% of health insurers are already using or planning to use AI for reviewing their prior authorization requests. While we believe that AI presents opportunities for plan efficiency, the unregulated use of AI could also exacerbate existing bias and discrimination, particularly for marginalized and disenfranchised communities who already experience disparate health outcomes and lack of access to insurance. AI is moving fast. The speed of technological advances in AI is far outpacing the changes in state and federal insurance regulation, and oversight is needed to protect consumers. When used appropriately, AI has the potential to quickly analyze patient data and historical records to make evidence-based recommendations to overseeing physicians, expedite approvals, minimize delays in patient care while reducing administrative burdens for both providers and insurers. To conclude, Blood Cancer United supports the development of a model law and urges you to continue on this path. While we understand this is a rapidly developing area, states are at the forefront of regulating the use of AI in insurance, and a model law will help create a regulatory floor across the states, promoting fairness and transparency for consumers and industry alike. We think the proposal from the American Insurtech Council is a step in the right direction to achieve this level playing field. As it relates to health, we would encourage a specific focus on plan use for AI utilization management practices, including prior authorization, to ensure patients do not face additional roadblocks to receiving medically necessary care. Thank you.
Thank you, Dave. And next, we will have Matt Overturf from the National Association of Mutual Insurance Companies. Matt, please go ahead.
Thank you, Mr. Chairman, members of the committee. Matt Overturf on behalf of NAMIC. A couple of comments really quickly. So NAMIC maintains the position that the development of a model law as it pertains to property and casualty insurer use of AI is both premature and unnecessary. While legislative and regulatory guardrails may seem well-intentioned, they ignore how existing insurance code already applies to the use of AI and the existing consumer protections they provide. Further, efforts often assume that the use of AI creates a higher degree of risk to consumers than human decision-making, while ignoring how AI used in the furtherance of insurance-related activities can create consistency, remove potential subjectivity, and enhance efficiency. I circled this in my notes, so it must be important. So the most important thing I'm going to say this morning, the strength of the existing insurance code is that it is focused on outcomes and consumer impacts regardless of the tool used. According to the insurance code, if it's illegal for a human to do it, it is also illegal when using AI, a computer, a cell phone, or whatever technology comes next. So for these reasons, NAMIC continues to urge caution for the development of a model law as it pertains to property and casualty insurer use of AI. Thank you.
All right, thank you, Matt. Now the floor will be open to any legislators who have any questions or comments. Yes, Senator Felskowski.
So, JP, I'm going to direct this at you. Do you think that if we're going to regulate underwriting claims, and I would agree with you, I think whatever we do, it has to be a broad stroke, should we legislate differently around health insurance and PNC?
Yeah, I think the nice thing that to dovetail off NAMIC's points, I think the nice thing about our model is the intent is to require governance inside the insurers and that they go through that process. And again, as he indicated, what's illegal is still illegal, and what's wrong is still wrong. But from our view, you want to ensure that everybody has a sort of minimum standard that they're looking at the operations and that they're making sure they're compliant. Because the difference with AI, it's absolutely true. It's just another tool, but the difference, it could run amok really fast, and it can accelerate where the problems come in. So what we're suggesting is it is the same, at least at this level, and we're only focusing on ensuring that there's a governance process and management and oversight over that process, and that there is a reporting and a look in by the insurance departments to be able to make sure that they're complying with that. Down the road, there may have to be different rules for the different lines, so that may absolutely be true. When you look at things like, figuring out what the pricing of a house is that's, destroyed, or a car. But in the short term, I think we're more focused on getting the governance right and seeing where the policy generally grows up with AI.
Thank you.
Thank you.
Thank you. Representative Lehman?
Thank you. And this, maybe Matt, the question, you used a term that I want to ask about a little bit. We had a situation where an agent reached out to me that they were stopped mid-quote because the home was ineligible, reached out to the underwriter, and the underwriter said, between AI and other factors, that's what we use for underwriting, this doesn't qualify. So when you tell me it's premature to regulate AI, but yet AI is actively being used in the underwriting process, help me understand the prematurity of regulation over the actual use of it.
I mean, the existing insurance code, so if they didn't underwrite that property and it followed the existing structure of the code, I don't know that it matters if it was AI or just the human or both. So that's from our current position. I mean, to Representative DeLon's point earlier, the reason we're not necessarily offering anything is because at this point in the development of AI, we feel that it falls under the existing insurance code. If we identify gaps in the existing insurance code and regulatory structure that for some reason AI doesn't fit, then we should have that conversation. But I don't think we're there yet, at least as it pertains to P&C.
And I don't disagree, and I don't want to take away this tool, I really don't.
Sure.
But my bigger concern is that AI was used to make a decision on an underwriting issue, not on a claim or anything, but on an underwriting decision, and then no explanation other than it was AI that was used. So a human in the past would finish the quote and then maybe say, hey, maybe it's not eligible in our guidelines or whatever. But we're getting now this midway through the process of being told it's ineligible due to AI. So that, to me, we're crossing a little bit over from the human touch to, and one of the things, I think I've said this before, AI is intuitive, as we always hear. Intuition is the ability to make a decision based on data with no cognitive reasoning. So you're not thinking about stuff, you're just doing it. So as we're going through this, the human, if the human can't do it, neither can AI, but humans aren't doing it. It's AI now is kind of taking over that piece. And this is an issue for NAMIC or for NAIC as well.
Sure.
How do you regulate technology? Because
Right.
when you say human can't, but tech is.
And I think in that point, the underwriting guidelines are what they are. So the human's going to follow the underwriting guidelines just like they're going to load that into the AI platform. So it's more just building the efficiency of completing that process for a property that isn't eligible, stopping halfway through so to not, I guess, for a lack of a better term, waste that time further down the line. So it's just coming to that decision a little bit quicker that ultimately would have been come to if you didn't have AI. You're coming to the same decision and following the underwriting guidelines, whether that's the person doing it or computer.
Assemblyman DeLon?
Well, I just wanted to add on that I think from our perspective, to your point, the concern is making sure that it's not used as a sort of cop-out and there's no sort of ability to sort of point fingers back and forth. Matt's exactly right. The insurer is responsible, but I think what we're trying to do is ensure that the insurer is taking responsibility and not pointing fingers, especially if it's a third party that's doing the work, and that they're doing the work up front to make sure that there is a process in play as they're making decisions. So thank you.
All right, now over to Assemblyman DeLon.
Yeah, and just for purposes of clarity, but the position that it was stated that I took wasn't a position. It was the position I cited based on the panel in Chicago, that there was no input or feedback. I certainly feel like we should look at this. We should take our time and get it right. That's a position I maintain. But getting into the questions, it's for JP, we'll start. It looks like the biggest difference between the two models is yours sets up a governance structure that's a little bit broader that goes beyond claims.
Right.
And the one that I have is, strictly related to claims, but basically says that an insurance company can't deny a claim using AI means that human has to be involved. Looks like that's the biggest hangup in this. Would you say that's
I
accurate?
think, yeah, and I do think that that distinction is important. As I talked about, there's 90% of claims in health, and there's, even inside health, there's significant differences across the way they operate. And some of the concerns I have is if you look at specific cases, for example, if you're dealing with cancer insurance or accepted benefits generally, typically there's a policy limit, and the policy limit would require the claim to be denied. And that's not looked at by a human now because it has hit the maximum amount that the policy has indicated they're going to pay. And having a human involved just adds cost to it. There are cases where, again, because it's broad and uses the term algorithm, if you're looking at denying a claim because it's exactly the same as maybe a claim that's already been paid, it's a duplicate, same data service, same doctor, same procedure, same coding, and you now don't have the ability, you have to have a human take a look at that, that creates a different issue. If you have a diagnosis that is clearly not coverable, in some cases, if you're looking at, say, to again pick on the fixed indemnity, something that's not coverable under the policy because it's maybe it's a standard, a wellness exam, and they don't cover wellness exams in the accepted benefits, that might be automatically denied. There's not a lot of sense in having a human look at it, or in the case where you have something that is purely cosmetic with no secondary diagnosis, that comes in on a claim, which does come in, and would need to be denied because again that becomes an algorithm issue as well. So I think there are issues there that will add costs and not a lot of value to consumers. We do agree, and I think I can't speak for the insurers, but my guess is they would agree generically to say, look, we would expect that if you have a complicated medical decision that's attached here, there should be somebody looking at this and some oversight. Generally in the prior auth world, it used to be, a nurse could say yes, but only a doctor could say no. Similarly, I think a lot of them are implementing similar policies for AI that, an AI might be able to say yes, and then you have to have a human in the loop for the more complicated cases. I do have concerns that just adding a human in the loop doesn't solve, the fundamental problems, doesn't provide oversight, doesn't mean that even if the person is qualified, that they're going through a process and not just closing out the edits and denying it because that's what the AI is and that's what their expectations are.
Okay, so if we could stay there for a second. I certainly don't know how insurance companies internally use AI to go through the various processes that they go through, which is why we kept it to claims, because it was more narrow and it was more focused on the consumer protection element, which I'm interested in. But I know just in my daily use of AI as a practical measure, if I give AI a task, I certainly step in and review it for accuracy before I send it out into the world for applicable use. And I think that would be good practice for any insurance company to do as well. In your instance, it looks like the first human contact would be at the governance, in your governance model structure. But I would say and this could be for all of the panel, at what point in the insurance, does an insurance company, through any of its process, whether it be claims or underwriting, or at what point does a human look at any of the work that AI does?
From our perspective, and you're exactly right, because I will fully disclose that the first draft of this model was done by AI, as was the second draft and the third draft.
But who directed the second draft and the third
exactly.
draft?
I directed the first, second, third draft, and then edited it ultimately, and still not all the language is probably right? But that's the idea. That's in part the idea of the governance process, right? When you're processing as an industry, again, just picking on health because that's been my experience, my more direct experience. 3 billion claims a year. The expectation when you're doing governance, and similar to market conduct exams, since you just passed the updated market conduct exam model law, when you look at the way they operate, they take a percentage of the claims to make sure that, when humans are processing, they're processing correctly, and they're making a lot of mistakes, right? There are, I was just meeting with the Georgia Department, and they had fined insurers $20 million for noncompliance in a specific piece that they're going through. So, in those cases, it's not like having a human is necessarily an infallibility either, right? And so the idea that we've got is that you are monitoring and going through this process, and the human in the loop is not just on a claim-by-claim decision, but the expectation is that you're looking at it holistically, and that even in the cases where you're approving claims, or you're coming up with rating, you're coming up with pieces, that there is a process where a human is overseeing that. So it's more focused on human oversight than sort of directly, directly in the claims process requiring a human to be in the loop whenever there's an adverse determination. I think even if you go down that route, I think there's going to be problems, honestly, functionally, and there's going to have to be some significant changes if the insurers are willing to offer them. I can't give you any of those because I'm not inside the operations, but having it apply just to claims is going to be really expensive for a lot of insurers from a cost perspective, even if it's just that. And narrowing that scope and getting it line by line is going to be even harder. Because again, you've got pricing issues inside, valuation issues inside P&C, which is very different. You may have, evaluation of case files inside life insurance, which may be different.
So I can't speak to exactly when inside an insurance company a human's in the loop, but
Yes.
Insurance companies still have claims departments, insurance companies still have underwriting and rating departments, and then there's the compliance department. So there are humans within those departments that are looking at these processes as they come in. As claims are filed, as claims are either paid or denied or whatever it is, they're there. When do they exactly see them? I can't speak to, but to date, it's not like AI has replaced an insurance company's claims department or compliance department. And then on top of that, you have the market conduct statutes in every state where the Department of Insurance can go in and look at how an insurance company is conducting business in that state. There's no exception for AI. So if they're doing something that violates, to my point earlier, that violates the insurance code, they're going to find that. So that's where our position is. The current existing insurance code is adequate until we identify a gap where it isn't.
But as a matter of practice, there's still humans looking at, basically every aspect of what you do.
I would imagine so in some way, shape, or form.
Thank you. Thank you.
All right, Senator Lang?
Thank you, Mr. Chairman. My question is mainly aimed at JP and Matt. I generally agree with everything you guys are saying. I'm not quite sure if you're on the exact same page or not. Hopefully you can clarify that for me. We know AI is coming. We know AI is going to save just about every industry considerable money. We know that if the insurance companies have a way to save money, there's many things they can do with that savings, from increasing EBITDA to lowering costs to consumers. So I believe in the long run, AI is going to be consumer friendly. My question is, and Matt, the first part of the question is probably more aimed at you. How prevalent is AI usage in the insurance industry today? And we know for a fact, when it comes to underwriting and adjudicating a claim, there are going to be human errors. That's a fact. I believe there's also going to be AI errors. Today, is AI superior than humans? I don't know. I think it will be one day. It may not quite be ready for prime time yet, but one day, as it gets perfected, it will be. So my question is, how prevalent is it today? And if a decision is made based on AI, not human interaction, is there a disclaimer to the applicant or the insurer, depending on if they are applying for a insurance policy or going for a claim, that says this has been created by artificial intelligence, and if you would like a human intervention in this, please let us know. And if that's not the way it is today, would that be a potential amendment that would give everybody a level of comfort? Let the AI have its way, but make sure it's clear to the affected individual that, this was AI, and if you want to appeal, here's the process. Thank you. Thank you, Mr. Chairman.
So Senator Ling, I think, the prevalence of AI, at least for NAMIC members, right? So we represent some of the largest companies in the country and all the way down to some of the smallest. So it varies. I mean, some of these companies are very sophisticated. Some of them are less sophisticated. So I think it just kind of varies depending on what makes sense for their business. So I don't have a good answer as to how prevalent is it. I think it's developing, it's growing. As insurance companies continue to try to find ways to gain efficiencies, that's one of the areas that they're looking at. But again, it's going to vary based on that individual company. And then in terms of the disclosure, I don't know that there is currently a disclosure in terms of AI is doing it today. It's something we can take back and talk to our members and, Lindsay Klarkowski, who's been here before you all, who's much smarter than me on this. Certainly we'll have that conversation with her, but, can take that back. Thank you.
And I would agree, and I will again, provide data to your wife that I'm agreeing with you. I don't think there's a huge difference other than a sense of partly a sense of tactics in the way we sort of look at this issue. We think that there should be, that the ideas are developing. And, look, the AI bulletin that this is based on has been, is in 25 plus states. This puts it in law. There are a number of states that don't do bulletins consistently, so it provides this. It also provides some ability to, to enforce that AI bulletin, around the governance procedures. That's sort of what we were thinking about when we put this together. The other piece is we do have some disclosures that are, sort of required. It's non-specific, but the insurer is required to sort of disclose in the areas where they're using AI and, to the consumer so the consumer's aware. I think there's, really strong variance in the way it looks. I will say, in case our AI overlords are overlooking us, that I am welcoming the day, at least for the record. But in all seriousness, this is, it's coming and it's changing. And, our hope is that this is the first step. I don't think it's a huge step if we're being honest about it, but I think over time, there's going to be some development. There's work on other ways to sort of look at this. There's certification processes. There's others that the private industry is doing. There's some discussion about a URAC style accreditation as an alternative. That's expensive and problematic and may only be available to large carriers, at least until it develops over time. So, we think it's important to take a first step, and that's how we were looking at it.
No, just a closing comment. Thank you, Mr. Chairman, for the indulgence. We do so many things, mandates on carriers that drive up costs. The carriers don't eat those costs. They pass it on to the consumer. I think AI is one of the things that has the tremendous amount of potential value to lower costs and give the carriers the opportunity to pass that cost on to the consumer. Thank you, Mr. Chairman.
Thank you. Next is Representative Tedford.
Thank you, Mr. Chairman. So what I hear you saying is the real protection for the consumer is the code of conduct rules, and that as long as the carriers are following those, it doesn't really matter whether those decisions are made by AI or person or, that type of thing. And so what I'm hearing is if we really want more protection for the consumers, it maybe should be through the code of conduct rules rather than restricting AI from making these decisions. Is that a fair assessment of what you're saying here?
Yeah, I think so. I think close. I think at the end of the day, from where we are, it's if we identify a gap, right? So the Assemblyman DeLon's having this discussion, if through these discussions a gap is identified, then we should fill that gap, or at least look to fill that gap. What we are seeing, at least at this point in the development of AI and the utilization as it pertains to property casualty insurers, is there hasn't been a gap identified yet. So, yes, to your point, if we identify a gap, there, then it should be looked at to be addressed. But until that is identified, we feel that the existing statutory and regulatory framework is adequate.
And from our perspective, we're just asking for assurances that all the carriers are going through that process, that they have their own internal process, code of conduct that they've worked on, that to establish their rules around AI, that they've put it in place, they're consistently testing those rules, they're going through the processes they should be going through right now, but we know there's going to be carriers, that for one reason or another, that it may fall off, that, other pieces, but they have some ability to sort of make sure that they are, in fact, have a code of conduct and are working through it.
Senator Tice?
Thank you, Mr. Chairman. Back in the day, in the 90s, I used to process health insurance claims, and I've been sitting here trying to think of a single thing that couldn't have been done more accurately and more quickly with AI, and there's not one. It's going to be infinitely faster, so whoever's doing that, find another job right now. But it's going to be trained off from the statute and the guidelines, whatever rules you're handing it, and then any conflicts associated with those are going to create problems. And so we're going to need to make sure that we're overseeing those. Is there anything that we can do in advance, because we've got federal guidelines, state law, where we're going to be able to review those and find out where those conflicts exist, and would you please bring those back to us so that we could address them? First point. Second point, data capture. AI is if nothing else, built for data capture. And do you see a way that we're going to actually be able to put guardrails on that so that that data doesn't move beyond the walls that it's supposed to be in?
I think from the data capture, I think there's, if you take a look, there's growing, I'm not a lawyer, but growing case law around pieces. Certainly there are specific AI platforms that are using, fair use that are problematic, I think, but that's more general. I think you have some, again, our governance structure is intended to say, look, if you're training it, you need to be training it on, data that you have access to that makes sense, that is legal. I think in health, there's certainly HIPAA privacy pieces, and what you're seeing is pretty consistently that the HIPAA standard is pretty good framework for health, and that's a pretty high bar and a pretty high standard. I think when you're dealing with the other pieces, I think there's the NAIC is continuing to work through their privacy piece to better understand where to go with those. I think there's consumer data that is, there's going to be some sensitivity to consumer data. And, one of the concerns that, I have when we take a look at some of this as we go through and we do some governance, and a couple of years ago, we brought a data privacy piece here. And the concern we had was, ultimately the bad data privacy law resulted in Montana not having access to clinical trials for a good bit because of the way they structured that law. I think the concern we have similarly is, for us, and where we're different than NAMIC, is we're concerned that there's going to be bad AI laws that are going to be introduced and potentially passed and create problems. And so, we think an interim step makes some sense, and we think it can deal with both your issues. Those problems that you're talking about where there's conflicts, there should be a process inside the company that looks at those. That doesn't necessarily need a direct regulator oversight or other piece, but it does mean that the company has to look at that and has to solve that. That's what we're looking at. And they probably do now, by the way, and this may be belts and suspenders, so I totally get that as an issue, so they may be doing some of this. But again, there are going to be outliers that sort of don't do it on a regular process, they forget, and that's sort of where where our concern is.
I'll just add, since JP said I was right twice this morning, I'll return the favor. JP's right there. From our perspective, there are existing data privacy and cybersecurity laws that insurance companies already have to comply with. The data that is coming in is already coming in. Insurance companies already have that data on policyholders. They're, taking in these policies, they're filing these claims and all those things, so it's already kind of there. The AI is just making that, to your point, a little bit more efficient. So, there are those laws there, and if we identify a gap where there's not something that's being addressed that we should, then we should have that conversation.
Senator Boyd.
Thank you, Mr. Chair. So I've been listening. I think you've probably answered most of my questions, but I'm going to kind of throw them out there anyhow because it's a very fascinating discussion. So AI is a form of automation, and so the initial thing that got me thinking is recently I was approved for a long-term disability policy, and the whole policy didn't show up. So somebody somewhere else wound up with my name and social security number and stuff like that. So I go, okay, so what mistake could happen with AI that gets magnified and sent out, whether it's a data breach or something I can't even think of right now? And then who's going to be accountable for that? Because if the insurance company just says, hey, we're new to the market, we had all these fancy tools, but we're out, then the consumers are going to be hurt by that. How do we ensure AI doesn't accidentally consider something? Like yesterday, we had a discussion on genetic information, and maybe AI finds that it's been programmed to look for that, but it's also been programmed to not tell anybody, right? And then the final thing is, again, as a healthcare provider, there's lots of articles now on just, hey, somebody reprogrammed it and said, hey, let's amp up the claims denials, which I get, but where else could that happen? Where that could affect the consumer. It's great for the insurance company, but it's bad for the consumer. And then finally, like, what if we're talking about life insurance and we're using AI underwriting and we all of a sudden approve some people who shouldn't be approved? Now who's paying for that, right? So those are the questions. So all that said, it's coming. I just want to make sure that whatever models we have are prepared for those type challenges.
Yeah, I mean, I think, and you haven't even gotten into the agentic AI piece, which is, where, it's doing, beyond, and it's actually taking independent decisions and not just going through a process. And there are agentic AI bots that you can have as a person to work through as well, which creates a whole different set of issues. I do think that, the framework is really important here. I mean, there's no reason you can't do the same thing with AI that you do with a human regarding, amping up the claims denials if you want to do that. You can just sort of create new rules, new edits that sort of go through and make it a little bit more, a little bit harder for claims to get approved. So I don't know that there's, I think it may be a little bit easier. But again, our approach is there's an expectation that there's governance and documentation around your AI processes that you're doing and you're using. And so as you're going through this, there are requirements that you're going through the testing, that you're ensuring that you're meeting the targets, you're going through that process. You can have the same problems you've discussed with having humans do it and make a mistake because they've got old guidelines that they've put in paper in front of them from an underwriting standpoint. And pricing, I think, is going to be the biggest one where there is potentially some issues. There are hundreds of thousands of page rate filings that are coming into departments with numerous factors that clearly use some significant data to sort of understand and micro-target increases. So the idea that we're focused on is making sure that the companies are not just having a governance process, they're checking it regularly, they're making sure it's biased, they're making sure it's accurate, that they're documenting that as a matter of process. And again, I think, some would say, well, they're doing that already, but there is there's always been a standard that if you are requiring insurers to do something in the insurance industry, you don't have the ability to look at every single claim. You don't have the ability to look at the number of complaints that departments deal with are probably running around 11,000 a year roughly, depending on the size of the state. Some are bigger, some are smaller. And, so there's not a lot that are coming through the department that they can use as data points. And so you have to rely on something that allows you to look into the company and understand that they've got processes in play. We do the same thing on financial, right? The idea now is you're not even looking necessarily and making sure that you don't necessarily have to make sure that the data that they've got, you want the accounting right, but it's not just the accounting. There needs to be a risk-focused exam to understand that the insurer understands where their risks are. This is sort of that same approach, is that there's an expectation that the insurer is making a risk-based look at all the ways they're using AI and making sure it's accurate, that if they're using it in rating, it's predictive, if they're using it in underwriting, that it doesn't lead to too many denials, which creates a different problem, even if it's illegal for them to deny it, there's no bias. It creates, a smaller sales platform, or that they're approving too many, to your point, where, there's going to be financial problems later on down the road. So there's a lot of pieces there, and there has to be, a standard. And we're just requiring it in law, which is where the big difference is. I think a lot of insurers would say, well, we're already doing this. But, requiring it and allowing the departments to look in creates a little bit stronger standard from our perspective.
All right, do any other legislators have any questions or comments before? Representative Morgan.
Thank you, and thank you guys for being here today. It's been an interesting discussion. I would like to say, I believe AI already is here. We just heard, about in underwriting, and, we've seen it in other places. So it already exists, it's expanding, it's changing, and it will change I think it will dynamically change how insurance is done across all the states, which is not necessarily a bad thing, right? So I think every legislator up here wants to ensure that, you guys have, the insurance companies have the data they need to make good, accurate assessment of risk, right, when it comes to underwriting and handling, what they're going to charge for their product. And I think it also goes to the other side of, claims handling. More accurate, better information, should lead to better results. Ensuring that both what's done by a human, there could be many instances where an AI could review a human's estimates on a car claim or a property claim and say, hey, you forgot these 10 line items, and add more to it to, assist. And I think for us as legislators, it's just ensuring that there is those checks that go both ways, not looking just to deny, but looking to ensure complete accuracy across the board, right? And I think, having whatever we can do to ensure the checks and balances are there, that it's even playing field for everyone, and that it's working to ensure accuracy on both sides, I think is what's important, and what I think the Assemblyman from New York was trying to get at in his discussion earlier today. So anyway, if you guys have any closing thoughts on that, I'd appreciate it. If not, that's fine.
I'll just make the point that, you all want insurance companies to have fair and accurate prices and process claims, but nobody wants that more than the insurance companies themselves, at least as it pertains to the NAMIC members and member companies.
No, I think we agree. I mean, we're in the same spot. I think I've probably talked way too long, so thank you.
Thank you. Miranda Motter of AHIP wants to step up and make some comments on the topic here, so floor is yours.
Good morning. I promise I will be brief. Thank you for giving me a couple of minutes just to make 3 quick points. One, I'm going to make sure that it's really clear that I say that health insurers are not using AI to deny prior authorizations when there are clinical issues at hand. So I know that there was some conversation and statements about that. I just wanted to be very clear about that. The second thing I wanted to say is, I would encourage you all to look at the study. I know that Dave mentioned that they put together. It is in the study, in the methodology that they used in terms of making some of the statements that they are, it is my understanding that they talked to one health insurer to help develop that study. So again, I just think it's really important to make sure that there's an understanding of where some of those statements are coming from, and whether there's validity, just reflecting one health insurer. The last thing I would just say is we stand ready and look forward to working with members of this committee and the sponsor on this issue. I can't reiterate how important all the discussions that took place at NEIC on the model bulletin. Many of these discussions were had in depth with multiple stakeholders at the table, all focusing on the topics that were talked about today. So definitions, what is actually included in the definition of AI? Is that automation? What are the standards to make sure that there's uniformity? And then last but certainly not least, and I know Matt talked about this a lot, but the regulators really came to a conclusion, and I know in the dialogue that they had here over the last couple meetings, and I know you'll have later on today, there was a strong belief that the underlying statutes that apply to insurers, health insurers, it doesn't matter if insurers are using humans or if they're using AI. There are clear standards, there are regulations that they have to adhere to. And so, they thought it was very important to reiterate those things and again, put some of those reminders in the bulletin. And I know that one of their efforts really this year is to make sure that in the states that have not adopted that bulletin, that they actually move forward and really try to encourage that. So I just wanted to say thank you. We stand ready to work with all of you, but I just wanted to make sure that I answered and clarified a couple of those issues that were raised. Thank you.
Thank you. Any other legislators before we shut it down here? Okay, well, thank you all for your testimony today and your insight. This is an issue that's not going away, and I think NCOIL does have a real opportunity to provide leadership for all the states here. So thank you, Assemblyman Dewan, JP, for the alternative proposal, and we're going to move on to the next item on our agenda. So next up, we do have a presentation on the retention and recruitment of insurance talent. Talent retention and recruitment remain critical challenges and opportunities for the insurance industry. Attracting and retaining skilled professionals is essential to sustaining innovation, regulatory compliance, and consumer trust. Insurers, regulators, and stakeholders can work together to build a resilient talent pipeline. To help walk us through the landscape is NCOIL Codispati, Director of Emerging Insurance Program, Risk and Insurance Education Alliance. NCOIL, please go ahead. Thank you for your patience.
Oh, thank you for Mr. Chairman for the opportunity to be here and to sit through that discussion, as it is also critical for the insurance education landscape and as it pertains to attracting and retaining great talent and how that landscape might be changing. Although, as I sit here listening, as I do at other conferences or sessions that I end up speaking at, much of the discussion makes me want to change the comments I prepared to make, though not change my opinion or where we're headed, but certainly add to the discussion. So I'm going to try to use my slides as best as possible, but also help with the previous discussion as well. So yes, my name is NCOIL Codispati. I am the head of the Research Academy and Director of Emerging Talent with the Risk and Insurance Education Alliance. You may previously know us as the National Alliance for Insurance Education, and may see the insurance education designations that we provide and continuing education through the CIC and CRM designations. We are generally and most importantly an education institution for insurance professionals. What I oversee is our emerging talent programs that are geared towards bringing in new entrants both at the high school and university level. We'll see if this works. There we go. We started talking about a talent gap, at least as far as I can remember, back in 2009 when Deloitte released their first study, followed quite quickly with a white paper by McKinsey urging the industry to come together to solve the pending talent gap. The number from Bureau of Labor Statistics that we've heard quite consistently over that time has been 400,000 available jobs or vacant jobs or job opportunities. And that number hasn't largely changed, but what has changed is the date in which that 400,000 jobs was set to come due. And what the research suggests, what the numbers suggest, is that it's not that we are not actively bringing in new participants or that the folks who were slated to retire in the years set out by the Bureau of Labor Statistics and since being moved aren't retiring. but that generally we're not seeing, the magnitude of the situation continues to be upon us. We do have a higher median age and workforce in our industry compared to the national average, 44 compared to 42. And 25% of insurance professionals are age 55 or over, and depending on when they decide to retire, certainly generally would suggest that 25% is of retirement age. We do have other factors impacting the need for talent. Generally, we have one of the lowest unemployment numbers of any industry, recently at 1.5% as determined by some recent employment studies. Voluntary turnover of 9%, which is generally shows a really healthy turnover as well, and that 53% of insurers are planning to add staff, or I should say now that we're in November, we're planning to add staff in 2025, and that number is largely unchanged for 2026. I left my job as an underwriter at the end of 2010 to focus largely on this issue. I was inspired by a session held by the Griffith Educational Foundation, which you all, I'm sure, know very well, that brought together 100 industry leaders to try to tackle this problem. And much of the tackling of the problem involved two kind of main solutions. One, educating more folks about careers in insurance at the earliest stage possible, and ensuring that we are providing them the opportunity to see how great our industry is. We have since been compounded by the discussion that we just had, AI, automation, and the involving skill set. It is certainly reshaping the skills that our industry needs, and certainly putting a different focus on the available jobs that we are hiring for. The same Bureau of Labor Statistics data suggests that over the next several years through 2032, that there will be fewer underwriting and claims adjuster roles because of the advancements in AI and automation and what roles AI can do for those job roles. Those are the two primary job roles that we've actually heard discussed today, and the need for human interaction. But what it's also suggesting, because many of those roles are where we see our entry-level talent come in. They're getting their first taste of the industry. They're learning by experience. They're learning how to make those underwriting or claims decisions. It certainly presents, to me, a very real fear that the education and training that we're providing to entry-level talent isn't going to be the same. Only 14% of insurers are expected to reduce their staff this year, so we're seeing that number in comparison to the 53 on the previous slide that were expected to add to their staff. So where are the roles going? They're all tech, automation, data analytics, but these are very hard roles to fill, not only in our industry, but in all of the industries across the board. So what is it that we need to do? Because we've already had a talent issue. We already have a perception issue with what careers in insurance look like. So how will we not only train those individuals, but recruit individuals who are now pursuing a different skill set? Just to finalize that final bullet point there, it is also insurance executives state that it's the data IT expertise is 43% the hardest to recruit for. So what do we need? We need smart policy that not only builds smart consumers, because at the end of the day, that is what you're talking about here as well. We're protecting consumers with the tools and advancements in AI and regulation, but those same protections come from education, knowing those policies, and knowing what's important to them. At the same time, that education builds a talent pipeline, right? It opens up the opportunity to know what careers exist, how individuals can come in and shape this industry, but also that great careers and the things that we do in insurance, like protect individuals, protect balance sheets, and really contribute to the overall society, is good and sustaining work. So I would love, this is the second time I've been here in 3 years, and I am generally giving an update on the state of talent and retention, but I would love to be sitting here one day talking about some model acts or laws related to insurance education or insurance employment across our states. Some of the things that are already happening from classroom to career, The organization I work for, the Risk and Insurance Education Alliance, rolled out the CISR high school program back in 2019 to help high school students earn a nationally recognized credential, which I'll talk about in a minute. We also have states who have career and technical education, that's the CTE and financial literacy requirements. There are insurance pathways in some of our finance curriculum across states, but certainly those are, many of those are opt-in pathways. We also see some great work being done at the community colleges. For example, Ivy Tech Community College in Indiana has an insurance certificate where students will also be able to earn the CISR designation coming up. But what I love about the state of Indiana is they've put so much focus on connecting the dots from high school through to their four-year institutions that it really is trying to capture insurance education at every part. They have the CISR high school program, which helps students then bring in 9 credits to their associate's degree at Ivy Tech, and then students then can transfer their associate's degree at Ivy Tech to one of the main institutions, four-year institutions like Butler and Indiana State. Community colleges also are putting a heavy emphasis on learners getting certifications, and at this point is one of the main ways that they're helping their institutions stand apart from others. So career-ready certifications where they can leave the institution and go right into the job market, which certainly with the skyrocketing tuition prices, which I am intimately familiar with as I have a freshman in college this year, community colleges are becoming an increasingly important decision. Our program at the Risk and Insurance Education Alliance allows students to study 5 modules of information to give them a really broad cross-section of the insurance industry, starting with risk management, which is an everyday tool all of us need to use. Introduction to both personal and residential. How much cooler would it have been if you knew what your auto policy might look like instead of the Pythagorean theorem, which as the mother of 3 teenagers who have all studied the Pythagorean theorem, but also as someone who majored in actuarial science, I think it's debatable which one's more important. No, I'm just kidding. But seriously, it's insurance literacy, it's financial literacy, it's what makes good consumers, but also builds trust as we are getting into changes in how we do underwriting, both in commercial and personal lines and health insurance. We also do a commercial property and casualty course and life and health. So as you can see, not only does it allow us to introduce different aspects of the industry for a career perspective, provides literacy, but also those students who think they're going to own their own business or manage one day and have employees. The curriculum is transferable. The students earn the same designation that you or I might earn if you took the CISR, Certified Insurance Service Representative, and actually 3 years ago when I was here, someone at the table did actually have that designation from a previous career as an insurance agent. This most recent academic year, we were in 7 states and we saw 77 students across those states earn that designation, while also providing 348 students the opportunity to learn more about insurance. So from our perspective, what does the state of insurance retention and recruitment? I think that when we see low unemployment and good retention rates or voluntary attrition rates, we do have strong retention. I mean, you can't speak to an insurance professional, for the most part, that doesn't love their job, has a storied past on how they got into it, but they certainly love it. What we need to do is ensure that this education is getting to our students in the best ways possible. And adopting it at high schools can be challenging if it's not mandated by the state. By next year, I believe the number of states requiring financial literacy courses will be 29, which is up from 6 in 2019. But most of those financial literacy courses now are around investing and finances. Certainly that took us a significant amount of time after 2008 financial crisis to get financial literacy into high schools. But the next step really is ensuring that insurance education is part of that, not only for good consumers, but to open up the opportunity for potential careers. We have seen states implement AI literacy in their education models, K through 12, which will help us at least in terms of the upskilling of jobs and the types of technical knowledge that will be required should our insurance companies, brokers, claims analysis go towards AI and automation roles. We've also seen at the state level mandated work-based learning. It goes by a couple different names depending on the state at the high school level before they're permitted to graduate, which is fantastic. Experience often leads to the know what you want to do. What we need to do is ensure that our agencies, our insurance companies, are the ones providing those opportunities too, because if it's other industries, we will lose out on the opportunity to recruit new entrants into the industry at the earliest possible point and hope that they just fall into it after they don't have a good experience in another career. So that's all I prepared, and I thank you for your time.
Thank you, Noel. Representative Tedford.
Thank you for your comments. I hold my CIC and CRM designations, so I'm very familiar. And your presentation, you dealt with, seemed the labor statistics were more on the carrier side and not on the agency side. Do you have any statistics on what those numbers look like on the agency side as far as in the future, the growth in that industry or like a reduction of staff? I'd love to hear comments from you on that.
Yeah, of course. So the 400,000 open jobs is across all industry job roles that the Bureau of Labor Statistics tracks, and certainly there are some that they don't track. We have not seen, or I have not seen, a decline in the number of agents or agency roles from the Bureau of Labor Statistics, generally speaking, but they do allow for you to dig into certain states and sometimes into certain counties to see what the attrition rates might be. So I do not have information right now on that.
Could I ask a follow-up on that? What percentage of your designees are in the agency side compared to carrier side?
I'm not the best person from the Risk and Insurance Alliance to comment on that, but as you're aware, holding the designations, our organization was created as a means to provide continuing education for insurance agents. And so the vast majority of our designees do continue to work in that space. It also happens to be the space that we see the most interest in bringing in high school interns. In fact, one of our best success stories is out of Laredo ISD in Texas, where IBC Insurance Agency actually guaranteed employment for any student in high school who earned their CISR. And today, Dale Randall, president there, has ran out of physical space for the number of students he's able to employ, and has brought on several full-time employees and some that are going part-time and going to community college at the same time. So we have seen the greatest interest from insurance agencies as it relates to providing opportunities for high school students.
Representative McFall.
They're fun, so they should give you one.
Thank you. So on your second slide where you showed the jobs that will be in demand, those all look to me like things that could be replaced easily by AI. So I'm a little curious as to why those would be listed as in demand, and I'm always afraid that we're going to be setting people up to train people, and then once they come out of school or college, those jobs are no longer available.
Jobs in analytics, AI, and cyber risk?
Yes.
Well, I would say that as AI and technology are, you're still going to need system engineers, you're still going to need folks monitoring. Like, there are still jobs and roles to train those. I don't think that in analytics, well, data analytics, AI or cyber risk, that AI is going to replace those at the same rate that they are replacing the underwriting and claims roles. But those are the jobs that are listed as most in demand for insurance companies today. And if you visit any insurance company job board, those are the ones that are there.
Yeah, it just surprises me because, like, I know I went into a battery factory that's in my district, and it makes batteries for electric buses.
Mm-hmm.
So there were like 10 people working in there because it was mostly robots, and they were very well paid, but there was like just 10 people, whereas before there would have been like probably dozens and dozens of people. And so I'm always curious as to when we start training people for future jobs, that when we list things like that, because to me, I'm sorry, I don't completely agree. I do think these are all replaceable. I think those are, tech roles, and insurance companies with their AI, is it their own AI that they're using, or is it another company's AI? Because oftentimes that's farmed out as well, kind of like Salesforce,
Right,
where
for
they're
CRM.
the ones that maintain it, they're the ones that do everything. And so I'm just curious, those seem like weird jobs to me to list as new roles in demand. They might be in demand right now, but in a very short amount of time, I feel like they're not going to be in demand at all.
Yeah, and that's a fair point because 2 years ago, underwriting and claims adjuster roles were still projected to increase over the next several years. And so technology is changing everything that we're talking about very seamlessly. I mean, where's JP when he wants to talk more up here? Probably could help me talk about, JP, you still here? Yeah, so JP can tell you, right? There's a number of insurance companies right now that are developing their own AI. If we know one thing about big insurance companies, is that they don't want InsurTech to own the technology. They want to bring it in-house. They'll buy those folks up or bring the people in that will develop it. But those are the specialists that they're hiring for, right? And so as quickly as that technology comes on, those jobs roles are changing. And so the underlying principle still remains the same. We still have to educate on what insurance and risk management really is. We have to educate on how AI and automation is changing those, and it's changing it way more rapidly than any other thing that has come on in our space. I don't remember who it was that talked about the act coming through page by page in a fax machine, right? But if you think back, I remember an internship where I was faxing out quotes and binders, and by the time I came back full time, I got to change them into a PDF and email them, right? And so, but how long did it take for us to transition from a fax machine to email across the whole industry, right? It was a long process. We're not there anymore, but we are an industry that takes our good old time changing. And I think what we're seeing here is that we can't wait anymore. We can't drag our feet. And we've been talking about this talent issue since at least the Deloitte study in 2009. And what we do really well is talk about things in this industry rather than act on them. And so I think there's a lot of urgency, and your comments support that if we don't start acting now, where are we next year or, 3 years from now when we're sitting in this room as it relates to talent? Do we want to take those chances? I don't think so. And we're grateful to the friends at the Griffith Foundation who come in and educate our legislators on insurance. I think the same thing needs to happen quite regularly with the vast majority of young people so that they are prepared for whatever change is coming.
Senator Filsowski.
I think, when you look at this, if you look at a practical aspect, and if you're in the insurance industry, we're going to use AI a lot on personal lines because it's pretty cut and dry in your underwriting. But when it comes to the commercial aspect, I think it's going to be much, much harder because you're looking at credits. No two risks are alike. You're looking at financials. You're not going to be replacing your commercial underwriters with AI at the extent that you might be on the personal line side. And also, everyone in my office is either a CISR or a CIC, and I used to sit on the board of directors for CISR.
Oh, then
Yes.
it was you that I spoke to last time I was here.
Yeah, it was. So say hello to Dr. Hold or his son. I don't know if Dr.
Both,
Hold is
both.
still involved?
Yeah.
Yes, I figured Bill would be, yes. But great program. AI will replace some, but it's never going to replace the human element. And I don't see AI replacing insurance agents. And even people that are going online to purchase their insurance, once they go through a really bad claims process, they're coming back to the agency force and wanting to interact with that agent. They might only want to buy from us in person, and then they want to just, communicate through email or whatever, never walk in the agency again. But they still want that original interaction. We're seeing it greatly, that, once they have a bad claims experience, they're coming back, they still want that agent. So you're not going to be replacing that personal contact with AI. I've been doing this 40 years and seen the ups and downs with, you're not going to be replacing people.
Yeah, and I hope that's true. And I, as a former underwriter, hope, I really enjoyed my job and I love the human aspect of it. My concern lies with those companies or agencies and brokers who make decisions about cost savings because they believe that there are automation or AI that can replace the human element, and it's done solely on a cost perspective, and make decisions in haste. I think those are the ones that will lose out, and those that remain committed to understanding the insured, understanding the risk, and making sound decisions will win out, but that is not why I'm here to speak.
All right, seeing no other question, Representative Lehman.
Sorry, one of the problems sitting way over here in the corner. First of all, I'm a CIC as well, but I want to give a shout out to, you mentioned Indiana, and I can kind of maybe answer the question I think the representative from Oklahoma asked. We're seeing the kids coming out of those programs going more to the carrier side. So I think you're seeing a lot more employment on carrier and maybe the E&S market brokers than you are the agencies, because I think agencies are more focused on, we're trying to recruit from people who are connected to maybe our communities and things like that. So it has been a fantastic program between Ivy Tech, Ball State, Butler, Indiana State. If anyone has any questions on that, I'm more happy to tell you about that. But it has been great for the program. And I think as more and more of these models focus on the human touch, even with the AI, you're not going to eliminate those jobs.
And I have one quick question. You had one slide on here with the number of active students in the programs. Are those all states that mandate this type of curriculum in schools, or this is, I guess, individual districts did it voluntarily?
Yeah, in fact, no state is mandating the curriculum, but there are states who have insurance pathways that have a recommended learning objectives to complete that pathway. So Texas, Indiana, Alabama are two of those states. So where possible, we make sure that we're meeting 100% of those requirements. But in a lot of states, it's just, a teacher wanting, or a school wanting to give an opportunity for a student, or they have requirements on kids getting certifications. And not all schools in states that have requirements actually need to fulfill them. So it is not a one-size-fits-all and really flexible and to fit each school.
Great. Well, thank you very much. And seeing no other questions, thank you again, Noelle. You've given us a lot to consider, and maybe next time you're here, we will be discussing some type of
like that.
model, so we'll see about that. And with that, we are getting ready to adjourn, but is there any more business before the committee? All right, that's good. Seeing none, I'll just comment that the NAIC NCOIL Dialogue Committee will meet in this room at 11 o'clock after a short break. And hearing no further business, I will ask for a motion to adjourn. We have a motion. Do I have a second? All right, meeting adjourned.